Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome to Drive to Success Mastering Auto Finance, the podcast where we help you take control of your auto financing decisions by giving you the knowledge you need to succeed. I'm John Lewis, and today we're going to do a deep dive into a topic that impacts everyone looking to finance a car, your credit score tier. Whether you've got stellar credit or trying to rebuild, knowing how your credit score affects the loan offers you'll get will make a huge difference. Lenders use credit score tiers to set your interest rates and loan terms, and understanding where you fall could be the key to getting the best deal. In today's episode, we're going to explain what credit score tiers are, how lenders use them, and what they mean for your auto financing options. So let's hit the road and get started on your journey to mastering auto finance. All right, so exactly what are credit score tiers and why do they matter? When you apply for an auto loan, lenders don't just look at your exact credit score. They'll place you into a credit tier, which is a range of scores that represent your credit worthiness. These tiers help lenders quickly assess the level of risk you pose as a borrower. The higher your credit score, the better the tier, and the better the loan rates and terms you'll be offered. Here's a breakdown of the typical credit tiers for auto financing. If a borrower has a score of 720 to 850, that's considered excellent credit. If a borrower has a score of 680 to 719, that's considered good credit. If a borrower has a score of 640 to 679, that's considered fair credit. If a borrower has a score of 580 to 639, that's considered poor credit. And if a borrower has a score of 300 to 579, that's considered very poor credit. Each tier represents how lenders view you as a borrower. The higher your tier, the lower the interest rate, and the better the loan terms you'll qualify for. But how do these tiers impact the most important part of your auto financing, your interest rate? Let's find out. The interest rate is one of the biggest factors in how much you'll end up paying for your car over time, and is heavily influenced by your credit score tier. So what are rate tiers 1 through 9, and what do they mean for borrowers? Let's start by talking about rate tiers 1 through 9, which are commonly used by auto lenders to categorize borrowers based on their credit scores. These tiers play a crucial role in determining your loan interest rate, terms, and even the type of financing options available to you. Here's how it works. Lenders break credit scores into 9 tiers, with tier 1 being the best possible credit category and tier 9 representing the most challenging credit situations. Each tier reflects the level of risk a lender associates with lending to a borrower. Let's take a closer look at each. Let's look at tier 1. If a borrower has a score of at least 720, this is the top tier. Borrowers here have excellent credit and are considered the lowest risk. The typical interest rates would range from 1.9 to 5%, or even 0% APR for promotional offers. Loan terms typically will range anywhere from 60 to 72 months with flexible down payment options. The key advantage is that you'll qualify for the best rates and the lowest monthly payments. Tier 2 is where borrower scores range from 700 to 719, and this is considered prime plus. Borrowers in this range are still seen as very low risk. Interest rates range from 5 to 6.9%. Loan terms are similar to the terms in Tier 1, though there are fewer promotional deals. Tier 3 is where borrowers' scores range from 680 to 699, and this is considered prime. This is the last of the prime tiers, and borrowers are still in a strong financial position. Interest rates range from 7 to 8.5%. You may not qualify for promotional deals, but lenders still offer favorable terms. And the key advantage is they offer affordable rates and terms without needing a large down payment. Tier 4. If a borrower has a score of 660 to 679, this would be considered near prime. This tier marks the start of near prime borrowing. Lenders begin to factor in higher risk. Interest rates range typically from 8.6% to 9%. As far as loan terms, some lenders may require a large down payment or slightly shorter loan terms. A key concern would be high interest rates, which would increase the total loan cost. Tier 5 is where borrowers have scores ranging from 640 to 659, and this is considered fair credit. Borrowers here face more scrutiny as lenders consider them moderate risk. Interest rates range typically from 9% to 12%. Loan terms, larger down payments, or proof of stable income may be required. A key concern here, of course, would be the high interest rates, meaning significantly higher monthly payments. Tier 6 is where borrowers' scores range from 620 to 639. This is subprime level 1. This is the beginning of subprime credit where lenders are more cautious. Interest rates typically range from 12 to 15%. Loan terms have shorter repayment periods and higher down payment requirements are common. A key concern here would be that loan offers may be limited to certain vehicles or capped amounts. Tier 7 is where borrowers' scores range from 580 to 619. This is subprime level 2. Borrowers in this tier face higher borrowing costs and stricter requirements. Interest rates typically range from 15 to 18%. Loan terms have limited loan options with significant restrictions on loan-to-value ratios. The high cost of financing can make monthly payments less affordable. Tier 8 is where borrowers' scores range from 550 to 579. This is deep subprime. This tier represents a high risk for lenders. Loans here typically come from specialized or subprime lenders. Interest rates range typically from 18 to 22%. Loan terms have very short repayment periods, anywhere from the range of 36 to 48 months, and require large down payments. A key concern here would be the total loan cost can easily exceed the vehicle's value. Tier 9 is where customer scores are below 550. This is the most challenging tier for borrowers, often requiring creative financing solutions. Interest rates typically range from 22% or higher. Loan terms mean that the loan may only be available through buy here, pay here dealers or other high risk lending options. A key concern here would be financing options are extremely limited and terms are often unfavorable. So why do these tiers matter? Because they directly impact how much you'll pay over the life of the loan. For example, a borrower in Tier 1 may pay a fraction of the interest that a borrower in Tier 9 would pay on the same car. That's why understanding your tier can help you make smarter financial decisions and potentially save you thousands of dollars. Now let's look beyond the interest rate and talk about other aspects of your loan that are affected by your credit tier, such as loan terms, down payment requirements, and loan amount. If you're in the excellent or good credit tiers, you'll typically be offered longer loan terms, 72 or even 84 months. Longer terms lower your monthly payments, making the loan amount more manageable. However, if you have a lower credit score, lenders may prefer shorter terms like 48 or 60 months, which can result in higher monthly payments. In the higher tiers, you may not need a significant down payment, and some lenders even offer zero down financing. But for those in the poor or very poor credit score tiers, expect to be asked for a larger down payment, sometimes as much as 20% of the car's value. This helps reduce the lender's risk. Your credit tier can also limit how much you can borrow. If you have excellent or good credit, you may qualify for larger loan amounts, which means more flexibility in the type of car you can finance. However, in the lower tiers, lenders may cap the loan amount, restricting you to a more affordable vehicle. If your credit score falls into the poor or very poor tiers, you may still have options through subprime auto loans. These loans are specifically designed for borrowers with lower credit scores but come with much higher interest rates, often starting at around 10 to 15% and sometimes going as high as 22%. While subprime loans can help you get a vehicle, be cautious. The higher interest rates and longer loan terms mean you'll pay much more for the car over time. Be sure to carefully read the terms and understand the total cost of the loan before signing. How can you improve your credit and move up the tiers? The good news is you're not locked into your current credit tier forever. If you want to improve your credit score and move into a better tier, here are a few tips that can help. Pay your bills on time. Consistently paying your bills on time is the most important factor in improving your credit score. Pay down your debt. Reducing your outstanding debt can lower your credit utilization ratio, which will have a positive impact on your score. Check your credit report for errors. Mistakes on your credit report can hurt your score. Review your report regularly and dispute any errors you find. Avoid hard inquiries. Try to limit the number of times you apply for new credit. Each application creates a hard inquiry, which can temporarily lower your score. By taking these steps, you can improve your credit score over time and move into a higher tier, giving you access to better loan rates and terms in the future. At the end of the day, your credit score tier plays a huge role in determining your auto loans, interest rate, loan term, and even how much money you'll need up front. The higher your tier, the more favorable your financing options will be. But even if you're in a lower tier, there are still paths to securing financing and improving your credit score over time. Don't forget to subscribe and leave a review and share this episode with anyone who might find it useful. And if you want to learn even more about auto finance, check out my book, Drive to Success, The Ultimate Auto Finance Guide, available on Amazon, or visit my website, www.theultimateautofinanceguide.com. Thanks for tuning in, and until next time, continue to drive to success.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life. life like morning sun. soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Loans and rates, they glisten like the star. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the Ultimate Auto Finance Guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the Ultimate Auto Finance Guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.